Over 600,000 short exempt volume for yesterday, the 6th. I previously told you guys that sell-off is market makers, hedge funds, institutions unnaturally suppressing the price against the algorithmic move that we should be seeing as of right now. Are we going to see that move? Do they have more shares to drop on it? What is the short interest now looking like? Are all things that we are about to cover. But most importantly, in today's video, I want to cover a Reddit post, and it's been a long time since we have done this, but it's going to be a lot of reading and a lot of information to take in. So if you want to, put me in your pocket. What we're going to do is we're going to take a piece of the Reddit DD, then touch on some numbers, then another piece of the Reddit DD, touch on the charts, DD, more numbers, etc., etc. That way you don't get fatigued on one thing watching the video. Pay attention. Hit that like button. Thank you so much. Let's get into it. So the OCC just proposed reducing margin requirements to prevent a cascade of clearing member failures. Now, we have talked about this, but we haven't really gone into depth. The OCC is once again proposing rules to kick MOAS and screw retail. They're trying to kick the can down the road once again with these requirements. The OCC is proposing a rule change to reduce margin requirements when there's high volatility so that clearing members won't default, because it would basically start a domino effect that would tank multiple clearing members. SR-OCC-2024-001 34-99393 PDF Federal Register Exhibit 5 PDF with the proposed change is completely redacted. Of course, Exhibit 3 PDF is similarly redacted. Though we do not get to see its tables of contents, a template comment to the SEC is at the bottom of this DD, which I can pin the link to this in the comments down below so that you guys can copy and paste and send something to the SEC so that these rules do not get passed. You can see right here, clearing agency's statement of the term substance of the proposed rule change for adjusting certain parameters in its proprietary system for calculating margin requirements during periods when the product's OCC clears and the markets it serves experience high volatility. So what does this mean? First, margin requirements have been calculated by the OCC using stands since 2006 to conservatively ensure margin requirements are satisfied. Basically, under stands methodology, which went into effect August 2006, the daily margin requirement for each account is based on full portfolio Monte Carlo situations and set out in more detail below. They're constructed conservatively to ensure a high level of assurance that the overall value of cleared products in the account plus collateral posted to meet margin requirements will not be appreciably negative at a 2-day horizon. As part of the calculation, margin requirements can go up when there's a lot of volatility, which makes sense, but as it turns out, this sensibility is procyclical. When the markets are stressed and margin requirements go up, a clearing member could fail to meet the margin requirements, default, then create losses that are covered by a clearing fund. As the clearing fund is funded by other clearing members, a loss paid out by the clearing fund could screw over other clearing members and cause them to go under as well. This is where you get systematic risk. A sudden, extreme increase in margin requirements could stress a clearing member's ability to obtain liquidity to meet its obligations to OCC, particularly in periods of high volatility. This is exactly what they're trying to do. They're trying to steer us away from the mother of all short squeezes, aka AMC squeezing, and we are right on that algorithmic move coming very, very soon. So the timing is kind of perfect, especially with what the market is doing. Speaking of what the market is doing, before we get into AMC's chart, 497.75, this thing is trying its hardest to push up to $500. Watch $500 to 501.50 over today and tomorrow, and potentially Friday as well. As of right now, the SPY does have a gap fill down to 494.45-ish, so just be aware. Volume has been fading on this climb higher, so we may just see a nasty push down on the SPY, a little bit of a cool off. Now, we previously said AMC short interest numbers T+2 from Monday to Wednesday is going to drastically increase, and it increased 11.86% now short interest according to Ortex that is reported on AMC. Again, we know it's much higher, but we use this to identify the trend. 29.72 million shares shorted. And if we come over here and we take a look at the chart, this is what AMC has been going through. It's exhausted. It is sad. It's controlled. It's manipulated. It's pushed to the downside. We broke out of this tiny wedge, and now we are basing on this channel. This small little drop right here needed 600,000 additional short exempts to drop on the stock on top of what they already used to bring it down on that same exact day. This is just a sad thing to see. Most of the volume that you see is volume that is unnatural, and it is all to push it to the downside. 60% of orders day in and day out are routed to dark pools. The system has to be fixed. Anybody who entered in AMC was never wrong. You weren't a dumb investor. In fact, you were right. It's just the system, the government, they cheated. They did you out, they stole money from us, and it's not right to just leave and let it happen again. As of right now, short exempt volume is just way too high. We're losing on the options chain. They are controlling this thing as hard as possible, and they're trying to put things in place to prevent this move from actually moving. And the fact that they need to prevent this move from actually moving means that the algorithms are going to be trying to push this much harder than dropping only 602,000 short exempts on it. Now, in order to prevent a cascade of clearing member failures, the OCC proposes changing how margin requirements are calculated when there's high volatility. When the market is under control, the OCC uses, in quotes, regular control settings for calculating margin requirements. But when things get frothy and turbulent, the OCC uses high volatility control settings to prevent significant overestimation of clearing member margin requirements. These high volatility control settings may be applied to individual securities, which are among several risk factors under OCC's margin methodology. They use idiosyncratic control settings when implementing high volatility control settings to an individual risk factor, example, GameStop, right? During the GameStop event. This control setting could be used for a particular stock. When the financial markets are really volatile, the OCC turns on global control settings to implement high volatility control settings across all or a class of risk factors. However, global settings are rarely implemented because it's only for when big shit hits the fan. OCC notes only 2 instances of global control settings have been implemented, which was March to April of 2020, associated with the onset of COVID-19, and then January 27, 2021, aka the GameStop sneeze, the so-called meme stock episode. However, individual instead of global, idiosyncratic controls are implemented a lot more often than global, right? Between December 19th and August 2023, these control settings were implemented on over 200 stocks, each lasting 10 days on average, ranging from 1 to 190 days. Take a look at this, right? In one instance, April 28th of 2023, OCC's idiosyncratic control settings reduced margin requirements by $2.6 billion for an unidentified stock with no options listed. That experienced multi-day jumps in stock price, including from $6.72 on April 27, 2023, to $108.20 on April 28th. Note, here's AMC's price action as well during that time frame. What's worse about all this, and I didn't even cover it all because the video would be way too long, is that the OCC doesn't want to hear comments from you. Written comments were not and are not intended to be solicited with respect to the proposed change. Moving on, GameStop short exempt volume also slightly high, 12,000, up from 10 and then up from 14. Losing on the options chain as well, not much happening there. GameStop, there's not much to say. You're watching for a breakdown, first testing 1350 and then coming into the zone under 1250, or you're looking for a up move to $15.25. Couple things to disclose. Disney, I got out of the Disney trade in the trading challenge. We're now sitting at 385, another gain. Once we hit 500, I'm going to fund it with another 500 so we can scale this thing faster. As many of you know, I didn't fund this account. Frenetically did themselves. It's the third link under the video. You can come follow me and copy my trades with the click of a button. As soon as I enter, you're going to get an alert, and you can press copy and your broker will execute the same trade, and you can trade with a much larger size even pressing copy. I have a full video on how to do that. I'll leave it right here. I'll leave like the tag thing. It's about 3 minutes long. Tesla, this is beautiful. Bounced off of this trend line, broke back above this one at 184.65, and it is holding. We want to see this long term for Tesla really hold above this level so we can move higher coming into middle of the year, right? However, March cuts not happening could be a negative catalyst or a temporarily negative catalyst for Tesla coming into March. Hopefully we scale up until then so we can have a little bit of a buffer if that does decide to shake down on Tesla. Overall, guys, that is what I got for you for today's video. I know we didn't cover much and talk about much, but let me know your thoughts in the comments down below regarding these rules that the OCC is implementing. And if you want to comment to the SEC, I'm going to leave it pinned in the comments down below. It's absolutely insane how many short exempts we have, short interest rising, and AMC being this low in general. Come talk with me after the video goes up. Join the Discord. The link is right under the video. We have the most amazing members in there who talk stocks as well as crypto all day long. Best vibes. We have options trading alerts, and it's only a coffee a month. I'm not overcharging like other YouTubers, so get in the Discord. Also, if you want up to 15 free stocks, sign up for Moomoo using my link and make a deposit into your broker. You will start earning benefits from there. On top of that, they're giving you 8.1% APY for 3 months and then 5.1% for the rest of the year. Much better than a high yield savings account, but also if you see a trade here and there, you can also take that and then just keep letting your money earn instead of moving it around. That is it, guys. Those links are under the video. I love you all. Lottery Stocks out.